All right. Good morning, good afternoon, good evening, depending on where you're at in this beautiful planet. Guys, happy Sunday. I hope you guys have had a good weekend so far and are looking forward to the week ahead, the market week ahead. Um, let's start off. We'll go over SPX. We'll talk about the levels. We'll look at where it's going, and then we'll go on from there to talk about the challenge. Hey, Deepak, great to see you. I hope you're doing well this Sunday. Always great to see a familiar face. But let's start with SPX. So I have the monthly chart up here first for a specific reason. For those of you who might be new, welcome. If you are new, then these might be new levels that you hear about. If you've been listening to me for a while, then these levels should sound very familiar, right? We've talked about on the monthly time frame how we have been at exhaustion levels since the pandemic lows, which makes sense. This thing really steamrolled to the upside as we saw some unprecedented gains in such a short amount of time. We started to see signs of exhaustion really starting around October of last year on the Momentum Awesome Oscillator itself. We finally started to see those red bars print in January. And so currently we know that we are starting to see a pullback. And typically, right, that means we're at exhaustion when the momentum pulls back to reset. We could potentially see a full reset to the zero line, kind of like what we did back here. So that might mean, right, if that takes the entire year into next year, that we could be either pulling back or we could consolidate. Because when momentum pulls back, you don't necessarily need the price to completely pull back with it. Sometimes all you need the price to do is chop. And so I started talking about this last year. I mentioned that right now I'm still inclined to think that we are going to see more consolidation rather than a sell-off, but we have to keep in mind our levels. Levels have been so important this year. And when we look at where our support levels were, they're, a ways away. So is this going to be a very volatile range of chop? Yeah, potentially, right? And so we're kind of at our first test here, whether or not we are going to hold our monthly support or if we are going to break it. If we break it, then that's more of a sign that we actually are going to continue with the bear market on the daily chart and that we could continue to see more selling throughout the year. If we can hold this level, then I'm inclined to think that it could still be a very volatile year, but it's going to lead to looking more like a choppy, consolidated year, much like we saw in 2015, 2016. And so these levels that, we've talked about quite a bit, I mentioned 4,000 was my big level to the downside. That was the first one. Notice how we are still holding that into the close of the week at 4,023, and we'll look at this on a daily and weekly time frame too. But in regards to monthly support, the main levels that we really need to hold are the ATR trailing stop, which is this dotted blue line for me, and the 30-period simple moving average. The ATR trailing stop is at 39.14 and 61 cents. So if you guys want to write that down, right, that's the first level I'd really be keeping an eye on. The reason why is typically when the market is in a bullish trend, which it is the majority of the time, right? We've seen it trade. It does a really good job of holding the ATR trailing stop as support, right? That can sometimes actually be a good place to potentially buy in the market to play for a bounce back up. We also have the 30-period simple. Overall, it usually does a pretty good job of holding that level. Sometimes you'll see a few dips below it depending on where that ATR trailing stop is, right? But it's usually around those levels that it likes to hold support. And this time, right, they're kind of in line with each other. 39.14, like I mentioned, was the ATR trailing stop. The 30-period simple is at 38.25. So those are the really big levels that we need to ideally hold for the next couple months, right? Now, that doesn't mean we can't trade below them during the month, but the idea is at the open of the month and the close of the month, we maintain trading above these levels. If we do, right, that's going to lead more into the thought process that we are in consolidation, that this is just going to be a really wide volatile year of chop, but overall that this is a good buy-in level. One of the clues that could be telling us that is the fact that we are starting to see a true low indicator pop up, right? It hasn't printed yet, obviously. We have to wait for the end of the month to see whether or not it's a valid signal, but it's certainly starting to appear. And we know that This signal doesn't print very often. The last time we really saw a cluster print was during the 2008 pullback after the housing bubble and the dot-com bubble lows, right? When we've pulled this back before on here in a 40-year time frame, we've gone back all the way to the 80s, and it's only printed less than 5 times, guys. So it doesn't print very often, and the idea is that you're looking at a discount price. The Bollinger Bands aren't technically flaring open, so for me, this would be a valid buying spot. Now, here's my hesitation, right? We know that right now, from a macro standpoint, when we look at inflation, when we look at supply chain issues, when we look at, some countries still going into lockdown in places, when we look at the Russia-Ukraine situation, the wheat situation, um, of course, the whole Fed interest rates, all that stuff, right? We're also going into midterms, which midterm years usually aren't necessarily bullish years, right? When it's election time and stuff. So you have all those macro things coming into play, which could weigh on this market a bit differently than what we've seen. And so my hesitation, and which is why I really want to watch and see how these levels hold, and whether or not they can, is if we do really start to see these levels break and we're selling off, right? Are we going into that year and a half and 2 years of selling? And if that's the case, we could get a cluster print like we've seen back here of the true low, and this could just be the start of it. So that's what I want to pay attention to myself. But those main levels around 39 and currently 38.25, we really need to see whether or not those can hold, because to me that's going to be a big decision point. If those can't hold, then we're very likely going down to at least the 3,500 range to test that level. That'd be right near the lower Bollinger Band. And ultimately, if we do continue to move lower, these Bollinger Bands are probably going to open up. And if they do, then we're likely going down to test the 100-period simple. That's at 2806. That's what we tested during the pandemic low. So it's certainly not out of the question to test it again. But we would need to see, quite a few breaks and a lot of selling there. So we'll see whether or not this can hold. Certainly if it bounces and makes a bullish divergent bar, then I'm more inclined to think that it's at least going up towards 4,500 again to test those resistance levels up there. And ultimately, right, what would that lead to? Chop, basically. On the weekly time frame, right, this is looking pretty weak. We are breaking below the 100-period simple. We have Bollinger Bands flaring open. We have technically more room for momentum to go to the downside. But similar situation where we do have the true low, and with the bounce back up into the close of this bar, it looks like it was attempting to hold the 100. We'll see whether or not it can keep maintaining that next week. But once again, 4,000, guys, that's the big level right now that we've tried to maintain holding, that I've talked about the past few weeks. And so that's what we're, continuing to eye again, because we opened the week still above that level, and then we closed it at 40.23, so we're still holding it into the close of that week. So that ultimately that 4,000 level is still trying to hold as a longer term support level. When we go to the daily chart, here are the daily levels to be mindful of in particular for next week. Hey, great to see you, Madeira. Great. Hope you're doing well. So over here, right, we have the Bollinger Bands still opening to the downside. Now, we do appear at the bottom of the axis with momentum. We've actually started to adjust it lower. So if we start to get some green bars, that will be our sign of exhaustion and a potential new bottom of the axis to play for. But we could keep getting red bars at this point and selling off. So if we get some green bars, if we start to see the Bollinger Bands flatten out, that's a better sign we're going to get one of those stronger reversals back to the upside. As of right now, I'm very cautious to say that. Once again, we'll be curious to see how we trade into next week. The reason why is we went up not once, but twice now, arguably 3 times if you count this bounce, to test the 100-period simple, and we failed. When you fail the 100-period simple moving average and you fail to break above it, that is never a good sign for the bulls. That's a better sign for the bears more than anything, because now at this point, especially because we broke the prior lows at 4,200 and made new ones, that is a very good sign that we are going to need a lot of strength to be able to pick back up to break above this level, which is currently at 44.33. Notice how I mentioned that bounce on the monthly chart, right? I said to 44, 4,500. Notice how that would still just be in line for a bounce up into the 100. It's going to need a lot more strength to be able to break above that level and go back into a bullish trend at this point. And so when you start to go in bearish trends, just like you do on bullish trends, you play into the first level. So our first level to the upside is the 10-period simple. That's 40.78. For the most part, if you fail to break and hold above this level, that's usually a time to short, right? That's a time to short the rip, and then you play back down towards the current lows or potentially into a new one, right? And with how the Bollinger Bands look, I'd probably be leaning towards a new lower, at least into those monthly support levels I mentioned. If we can start to break and hold the 10 as a support level, which is at 40.78 currently, then that's a good sign we'll bounce back up into the next range. Now, I would still be cautious around 4,100. That acted as support back here technically as the low of the year earlier in February. We can see that we stalled a tiny bit at that level back here, So it could be that we break a tiny bit above the 10, but stall at 4,100 and go to the downside. So still be mindful of that range. But if we can break 4,100, 4,200 is going to be a bigger resistance level to break above. And the reason why is because overall 4,200, for those of you who have been listening to me for a while, right? I mentioned 4,200 is the first big level. If we break that, then we're probably headed down to 4,000. And that's so now that we've broken below it, right? We went down to the 4,000 range. 4,000 is what's trying to overall hold us support here. So when we bounce back up, this support level now turns into resistance. And certainly if everything continues to trend to the downside, it wouldn't be surprising for this 30-period simple to get closer to that 4,200 level and to not only be as a price resistance level, but then also a technical level with where the 30 is at. So that wouldn't be surprising with how that's angled to the downside right now. Of course, if we break above 4,200, 4,300, given where the 30-period simple is at currently, right, that would make sense. The ATR trailing stop is slightly above that at 45. And then ultimately 4,400, I think, is going to be the bigger hurdle at this point to break above. And if we can break above that, maybe we could try and get going. But there's a lot that would need to change about the technicals for what we're seeing here to get that strong of a bounce. And right now we don't have any sign of that at this point. So all I'd be looking to do, right, is play from one level into the next. We need to be cautious of that monthly support. Sometimes traders can get so focused on whatever particular time frame they like to trade off of, whether you're an intraday trader and you focus on like the 5-minute chart, whether you are, a swing trader and you mainly focus on the daily chart. And they forget sometimes to pay attention to other time frames, not necessarily to take the trade off of it, but to be mindful of the levels that you're running into. So if you're focused solely on the daily chart here, you would tell yourself there's no way this is going to bounce, right? It looks like it's just going to continue to peter over and die. So I need to be shorting this well into 38, 3,700 with how the trajectory of this trend is going. But because we know to look at those other time frames and to be mindful of those levels, we, one, know that there's support down here, and two, those would make good targets to the downside. So that if daily resistance holds, we play back down into 3,900, right? We play back down into 38.25 if it breaks the 3,900 level. And when those level holds, we know to take our profits off the table. And if we want to be a bit more aggressive, then that's when we look to play for a potential bounce back up into daily resistance again. But it's all about playing the levels in this market, guys. It's really been helpful, at least with my trading. And so I really want to make sure that if you guys can take away anything other than just, of course, being aware of your risk, right, is to really be mindful of the levels this year and understand that if we do remain in consolidation on the monthly chart, it could be a very wide range of whipsaw type movements. Because keep in mind, this right here is monthly support. This up here at 4,800 is technically monthly resistance. That is a 1,000-point range in the S&P that we could ultimately chop in this year if all we are going to see is consolidation on the monthly chart to allow that momentum to reset. So we'll see what happens. Of course, like I mentioned, if we break those monthly levels, that leads more into the bear market idea. And then we could start to see that cluster print because if we are going into a bear market for the year or so, right, that makes it look more like the dot-com bubble kind of pullback years that we saw, the 2008 pullback years. And if that's the case, then the recovery time on that to get back up to these prior highs around 4,800 typically takes, at least the last few times that it's happened, from a big picture point of view on the monthly, it usually takes like 5 to 7 years to get back to those levels. So that's why I mentioned I like seeing the true lows. I like that monthly support is holding, but I certainly want to time my entry properly because if we start to break those levels, you know, that's like a 5 to 7 year time frame then that we're looking at for a potential bounce. And to really work our way back up if it's going to be a similar, time frame to what we've seen in the past. If they hold, right, if this level really can hold, then yeah, we might start looking to buy in some things longer term, right? Like some swing trades or leap trades where you go out just a couple years. But that's because it has a better probability of getting up to 4,800, maybe late this year, next year, or something like that, if those monthly supports can hold. So we'll see what happens. We'll keep a close eye on the levels, right? We'll be respectful of what we see and play in between them accordingly. But that's right now what I'd be watching on SPX. So you're going to have a battle down here with monthly support. And then, of course, you want to be mindful of daily resistance. If we see any signs of exhaustion, that's a better sign we're going to get one of those stronger reversals on the daily chart back into the 30 or potentially even the 100. But if we can't, right, if the 10 continues to hold, just keep shorting it down into monthly support. And when we break those levels, then play into the next range unless it really looks like it's breaking. And then, at that point, we'll reassess what levels we could play into from there. So that's what I'm seeing for the market, guys. It might be that it's a bit of a choppier week in that case, right? If we're holding monthly support and trading between the 10. So just be aware of that. But that's what I'm seeing at this point. So let me pull up the challenge account and we can talk about what we've done this month. Focusing mainly on this week. So here is the $500 challenge account. For those of you who are new, basically what I like to do is I start the account at the start of the month with $500, and then I look to see how much I can grow it. But more importantly, it's to help teach y'all about risk, to show that you don't need to put the full $500 into one trade, that you can take a very small amount of money, right? Something that you might use towards a vacation or for, my gamblers, maybe that's what you would take to a casino night at Las Vegas or something. But you can look to play it on the options side of the market. And still, of course, like I said, not necessarily put that all into one trade, but to break it up across multiple trades and to try and grow your account accordingly, while always being mindful of that capital risk. So with that in mind, right, with the start of May, we've only jumped into 5 trades so far. We had the first trade was the SPX pin. We've done that a lot this year. Overall, that's been a really good trade for us. I believe this one we got close to the pin on, if I remember correctly. Let's see, expiration. I usually let these cash settle, by the way, guys, for the SPX trades. So we opened that at 220 on the 4th. May 4th, we closed at, oh yeah, that was Fed Day, yeah. So we closed at 4,317 cents. I remember that trade now. We were right off of the 17 cents off our pen, right? So it worked out beautifully on the profit there. For those of you who don't know how to figure out profits on broken wing butterflies, happy to show you guys. So in this point, our broken wing butterfly was a 10-5 point width spread. And so we were 17 cents off the pin. So $10 is the wider width of the spread minus our 17 cents because we closed at 4,317 cents. That means it cash settled for $9.83, right? We got into the trade for a $1.30 cost basis. So we take away from $9.83 our cost basis, which in my case was $1.30. And we ended up with an $8.53 profit potential. Certainly not a bad risk versus reward there, right? It ended up being a 656% return on our risk. So Pretty nice to see, of course, with that kind of profit, right? We've already doubled our $500 for the month. So always great to see that. And it starts us off pretty well, right? Because if we end up taking a loss, we can still end up being net ahead. That's part of the reason why we look at these trades. If you notice, 130 out of $500, right? That's all I'm looking to risk out of the 500. I keep a good chunk of it to the side because I know there's a possibility that this might be a losing trade. So this is why we don't want to bet all 500 into one trade, right? We want to make sure that we have a few chances out there to be able to trade and look for those winners this month. The next trade we jumped into was an Amazon Thursday into Friday sell-off trade. Those have been overall pretty well for us this year. We jumped in for $1.70 on a Thursday. We closed out at $3.50 on a Friday. That was a $1.80 profit. That's obviously just a little bit above 100% return on our 170, so that's not bad. So 853 plus our $1.80 brings our profit to the month to 1,033. So 1033, not bad, right? Because keep in mind, the reason how I'm getting 1,000 is because these are all one lot trades, right? So to figure out what that is capital risk wise for the option price itself, you take the 1033, you times it by 1, because like I said, they're all one contract style trades here. And then you times it by 100, because that's how many shares are per option contract. And that's how you get the total cash amount. So right now we're up 1033 for the month, right? Then we did another SPX trade. This one was this week. We did 2 of them this week. Our first one we did May 11th. What was our pin? Our pin was, I think, 39.30 was the pin. We got him for $1.60, and we ended up closing. We were a little off from the pin on this one. We ended up closing at 39.35 and 18 cents. Not bad though, right? So once again, let's figure out what we made on that butterfly. So our one strike that did go into the money was the 39.40. So we take 39.40 because that's the one that's in the money that cash settles, so it has some sort of value to it. We take away from it where we closed that day because this is SPX, so unless it's an AM expiration, the cash settlement works off the closing price. The AM monthly expirations are a little bit different. That's why I don't typically trade them. But for the remaining PM expirations, they're always off the closing price. And so it was 39.35 and something change. Let me get that. 39.35 and 18 cents. There we go. So it cash settled for 482. That was the capital that ended up getting returned into our account. Of course, depending on your brokerage platforms, sometimes if you let it cash settle on SPX, they'll charge you a little fee. So just, keep that in mind. I don't think they do it on Thinkorswim, or at least last I checked, they didn't. But 482 was the cash settlement. We take away, once again, from that our cost basis, right? We have to take into consideration what we paid for the trade. So we take away from that $1.60, ended up with a 322 profit, right? Once again, not a bad risk versus reward. That is not what I meant to do. 322 divided by 160 is a 201% return on our risk, right? So pretty good profit there overall for the capital that we put out. Once again, notice how even though we've technically locked in 1,000 of profits already, I'm not really looking to dive in there and put, a huge chunk of it out there. I'm really still keeping my risk small and in line with what I would normally do to grow this account. So I'm being very conservative about my capital risk out there overall. So 322 was the profit we took there. We add that with our 1033. So now we are up, we're up 1355 now for the month, right? So not bad. Once again, for $500 of capital risk, we're already up over $1,300. Then we had our last trade that we put on, which was Friday's SPX pin trade. And man, this one just did not work out for us, unfortunately. Let's pull it up. So we usually, going into this year, right, the reason why these pin trades have worked out so well is because we typically see some sort of volatile move either up or down one way or the other going into the close of market within a certain time frame, which is why you see a lot of these SPX trades come on, and typically alerted anywhere between 2 to 240 sometimes if I'm jumping in a little bit later. But we usually get some sort of run into the close. And so when we started to break the ATR trailing stop, we had Bollinger Band starting to open on our 5-minute chart as well as the hourly. It was starting to open up some again. And so when we started to break it on the 10-minute chart, it looked good to the upsides. The next target was 40.40. That's kind of been an intraday resistance level that we've seen. 40.50, of course, is a psychological level. And so I was looking to play up into those ranges to see if we could test it into the close and get one of those runs to the upside, right? Maybe see some short covering happening, people taking profits before the weekend, and staying above 4,000. The slight issue I had, and if you're in the profit recycling mastery, right, you heard this on the mic live, the slight issue I had was with the Bollinger Bands on the 10-minute chart in particular. They weren't really helping us out. They weren't trying to flare open to the upside with the other time frames. Usually when everything is in line across the time frames, it makes for a much easier entry, right? It gives you that better conviction of it going to follow through. But the 10-minute chart was kind of fighting us, and then we ended up pulling back some. And we started to see some weakness. So I actually, in the mastery, looked to try and play this back towards 4,000 because we saw earlier in the week that we saw some pins going into the close around 4,000 because that is just such a strong magnet level. Sometimes those really big psychological levels can kind of bring the price back down to them, especially with all the open interest that we had at that strike. That can sometimes lead to that pull. But we didn't quite get that, right? We got close to it here with the dip, but then we ended up holding 5-minute support. It was a dip right into that range and we bounced. This is what I mean about being mindful of your levels, by the way, guys. It doesn't just mean it on like a long monthly time frame or anything like that. It's even when you're intraday trading, right? You're mindful of the smaller time frame levels. And it ended up holding. And so we ended up right in the middle of that range. So like I said, you're not going to get a winner every time. And if we had loaded the boat on this trade Friday, if we were like, yeah, well, let's put all our winnings into this trade, we'll, double up. Like, no, no, no. That's much more, as much as I love to gamble, don't get me wrong, love gambling. But that is much more a gambler's mindset. And that's not what we're trying to do here. What we're trying to do here is to provide ourselves some sort of income so that, we can pay off bills, right? So we can save for a bigger vacation than what we might have used that $500 for initially. And so we need to be mindful of that capital risk. So we ended up losing, right? Got to take that into consideration, minus $1.80. So overall for the month though, right, because we didn't load the boat up, we still have 1175 up for the month, right? That's certainly not bad off $500 of risk, especially when we never had the full $500 out there at one time. Notice for the most part, I'm only in one, maybe two trades at a time in the challenge, and then I'm out and going on to the next one. So I'm never in that full $500, and yet we've still been able to grow the month. And we're only halfway through the month, guys, right? 15 days. So we still have half a month left to see if we can keep growing up this 1100 that we've already done. And for the year, right, we're up 44.67. And notice, even here, right, we've only traded 3 symbols this year, Amazon, SPX, and Tesla. Our Tesla has not done well this year for our trades, right? We're down 316. There's a reason why you haven't seen a Tesla trade recently at all, because I'm like, I'll just leave that chart alone for now. We're doing great with SPX and Amazon already. And certainly if I see something else on a different chart, I'd be happy to jump into it if it's within the risk tolerance. But for the year, right, we're still up 44.67. So certainly not bad. And then, of course, you can see here that's the 1175. That was the math I just did that we're up for the month. So overall, doing pretty well on the challenge this year. Very happy about it. But hopefully, right, you guys can see how you can grow your accounts with just a very small amount of risk. And certainly, if you want to look at compounding it and doing things like that, you can. But hopefully, right, this gets you in the right direction of how to look at setting up your account. So that way you're not loading the boat on anything. And so, when you are hit with that losing trade, just like we were here, you're not blowing out your account because of it. So, and then is SPX price for options settle at 3 p.m. or at 3:15? It settles at 3. That's a great question, Deepak. So it, if it's expiration day, like the 13th, right? It closes right at 3. You cannot trade that past 3 o'clock. Now, SPX can technically trade 15 minutes after the close, but you can only trade all the expirations after that day. So that was the 13th. So you can only trade from the 16th on, right? Because those are the ones that haven't expired yet. So you can open trades out here, you can close trades out here. It's the same with SPY, the Qs and DXRUT. And I think there are a few other like hand-picked ETFs where you can do that, where you can trade 15 minutes after the close option on the option side of things. But if it's for expiration that day, you cannot trade it past 3. That's where it cash settles. Now, the thing to keep in mind, guys, is I've seen sometimes when you're in activities and you're like looking at your position, sometimes it will show you a much bigger profit than you actually get, and sometimes it shows you a much smaller profit than you actually took. So it will ultimately, when they go through the cash settlement, it will figure out what it actually is, right? What's correct, and it will credit your account accordingly, or debit it accordingly if you ended up taking the loss. But it will figure that out and it will work out properly. For whatever reason, sometimes the strikes just look a little funky going into the actual expiration date. And it's not just on Thinkorswim. I've seen it on Tastyworks. I've seen it across other platforms. It's just something weird that happens. So, if you always want to figure out the price, right, it's easiest just to do your math by hand. And usually if we cash settle in the money on those SPX trades, I send out a follow-up update letting you guys know exactly, where it cash settled for and stuff. And the other thing I will point out is sometimes on the closing price, when you're trying to figure it out, this thing will jump around sometimes even by like 20 cents sometimes on the close. I don't know why that is. It just is the way it is. So we'll see if so that's why I'm always like, it was around this. Like I think for the Wednesday trade, I was like, it's around 35.17, and then it ended up actually being 35.18. So just keep that in mind too. Just how the market is. But they'll definitely credit your account accordingly. So yeah, and it happens, Twitchly, right? We haven't had a winner every time on SPX. SPX has definitely been like a big component to our wins this year on those pin trades because, like I said, there has actually been a very nice method and strategy around them to where they have worked out a lot of the times. But every now and then, right, it just, the market's going to do what it wants to do. And sometimes they don't. You could have day traded that for a quick profit. You would have had to be quick about it. But that's why it's all about the risk, right? This is why we don't load the boat. And we'll just look again next week. We certainly have the capital to do so outside of the 500 that we started with, right? We have 1,100 in wins. So we definitely have the capital to continue to look for trades. And if there is a good pin trade, then we'll, check it out. SPX, guys, also, I think it's starting next week too. It has expiration every day of the week. So for those of you who have been trading options for a while, you'll remember at first it was just the AM expirations, and then they added SPX PM expirations. I remember that, and then they have the SPX Monday, Wednesday, Friday expirations. I remember when that change happened. And then we have now Tuesday expirations. Those have been very recent, right? Like just the past month or so. Tuesday has been an expiration day. And I think this week starts Thursday. So we have Monday, Tuesday, Wednesday, Thursday, Friday, all potential pin trade ideas that we could look for. So we definitely have the opportunities. It doesn't mean you necessarily need to take every opportunity, right? You want to make sure that you're not just throwing your money at the wall, but you have a setup that looks good. Like I thought this setup looked pretty valid. The only thing I didn't like were the Bollinger Bands, and unfortunately those won out. But you want to, of course, get the setup. You want your risk tolerance to be in line with itself. And then if it all works out well, right, then you jump into the trade from there. But they've certainly given us a lot of opportunities now that SPX has an expiration every day of the week. So we'll see if we can at least find a couple for next week, right? Otherwise, guys, I'll keep my eyes peeled. If there's something else that I like on Amazon or anything, I'll certainly let y'all know. But as always, may the trade be with you, my fellow Jedis. I hope you have a great start to your trading week next week. Certainly keep your eyes peeled to Twitch or Twitters or, at Simpler Trading the alerts, and I'll let you guys know if there's a challenge trade. Otherwise, I look forward to talking to you next week, and we'll see where we're trading then. Have a good one, guys. Bye.